Off the top of my head, I was going to say no. I can't give you a timeline because I mean that's a crystal ball thing. But if you're starting the timeline with a credit freeze, I can tell you pretty much exactly what's going to happen. Everything will stop. Within 72 hours, nothing will work. Grocery stores will be empty. You won't be able to get gas. You won't be able to get anything. I mean, within 72 hours, it will become every man for himself. Cash, physical paper cash, will work for barter probably for a couple weeks, maybe 4 weeks. But after that, I mean, we'll be on a barter. The only way to transact will be by barter. And the best thing to own if we're going to barter is junk silver.
In the past year, gold and silver prices have surged, driven by massive buying from China and Europe. But according to financial expert Bill Holter, we are on the brink of a government reset that could bring the US economy to its knees. Holter points to data showing significant market moves since last October, with gold pushing up against $2,400 and silver eyeing a breakout over $30. He warns that within 72 hours of a credit freeze, grocery stores will be empty, gas will be unavailable, and cash will only be good for a few weeks before we descend into a barter economy. Holter highlights that the safest havens in this scenario are precious metals like gold and silver, which have historically held their value. He predicts that silver could hit $50 in the next 6 months, making it a critical asset to own. With power shifting from west to east and the potential for China to devalue its currency, Holter advises against trying to time the market. Instead, he emphasizes the importance of securing your wealth in physical assets before it's too late.
Go back to October, November of last year, and that's when the moves in the metals started, and they really went into gear the end of February, early March. That in gold, the big buyer has been China. You're also seeing pretty good buying out of Europe. In silver, the huge buying is coming out of India. And both metals got pretty overbought in early mid-April. We had a pretty good, decent-sized pullback. The prices relaxed, and the gold nor silver were overbought. And then just in the last a week and a half or so, you started to see some strength. And I picked up on the article that I posted. I posted 3 charts: gold, silver, and the miners. I used the HUI index. And what you'll see is that the HUI has gotten to the point of close to breakout. It's breaking out at this point. Over 275 is a breakout. Obviously, over silver is a breakout. And those aren't new highs until we get to $50. There's really nothing on the chart between $30 and $50. So once we get over 30, I think 30 is going to become the floor. And you probably, I'm guessing within 3 to 6 months time, you'll see $50 in silver. And of course, gold is again pushing up against 2,400. Over 24, 25 is a new high. If you look at the charts that I posted, you can see on the very bottom of the chart, you see the MACD, that's the moving average convergence divergence. And if you look at the very current time, you'll see on all 3 charts, you'll see a hook that's forming, and the HUI and silver have crossed over, and gold is lagging just a little. The hook is not fully completed, but we've got a crossover in silver and the HUI, and that's going to create momentum buying in silver, gold, and the HUI, and that'll push these things into new highs. And I don't. Yes, we're going to see huge volatility, but the paper markets no longer rule the price as they have in the past. I mean, an ounce of gold or an ounce of silver that was mined 100 years ago, 200 years ago, 1,000 years ago is still only an ounce of gold. Nothing changed. It doesn't go up, it doesn't go down, it just is. What changes is the value of the currencies. And watching gold, silver, and even the cost of a cup of coffee going higher is a function of the fiat currencies losing purchasing power. Just look around you. There is a vast reset from west to east happening. And once that happens, you're either in silver and gold or you're out, and you won't have the ability to get in. So if you think these prices are high, wait 3 months, 6 months, a year. If were China to revalue their gold, and the way to describe that, not revalue gold, but devalue their currency, that's going to price the metal. So if you're trying to time this, good luck with it. I think that's a foolish move. You've got the COMEX in New York, you've got the LME in London, and those paper contracts are what, for years and years, have priced the metal. Fast forward to where we are now, and what you've got is a premium of $2 to $3 in silver and $30 to $50 or more in gold, Shanghai over the Western prices. So what's happening is you're getting buying in the West, demanding delivery, and then that metal gets shipped to China, and it's an automatic. You're locking in a profit as soon as you buy the metal. You buy the metal, you sell the metal at the same time, then you deliver it, and you book the profit. So metal is being bled from west to east. And if you're a student of history at all, power flows with money, and money is gold. You're not going to sell gold or silver until there's a currency that you can trust, until there's a place for you to put your money. But we're nowhere near that. We're nowhere near a peak, so to speak. The peak pricing in gold and silver will be, if you want to call it, the bottom pricing on fiat. And fiat ultimately can go to zero. So the inverse of zero is infinity. So I guess my answer is, I would answer the question with the same question: where would you put the money? And if there's no place to put the money, then why would you get out of gold or silver, which cannot bankrupt? It can't be devalued. So you sit with the metal until you find a currency that you can trust. I've been talking about the ratio trade for years and years. Silver is way undervalued to gold, and I urge people to overweight in silver. And at a later date, as the ratio comes down, here we are at 80. If the ratio came down to 40, that would mean silver doubled the performance of gold. And if you swapped silver for gold at a 40 ratio, you'd end up with twice as many gold ounces than if you just bought them outright today. So you'd be buying gold with you'd be buying less expensive gold with more expensive silver, and you'd end up with more gold. There's really only one reason, and that's God. God made the metals in the crust, and he made there's 10 ounces of silver for every 1 ounce of gold. So that's God's ratio, 10 to 1. And man's ratio is 80 to 1. One of them is right and one of them is wrong, and I would bet on God rather than man. Yeah, pre-33 gold, in law, they are considered collectibles. And if there was a confiscation of bullion, those would not be affected because they're not bullion, they're collectibles. Going one notch down the totem pole would be eagles. Those should give you some protection against confiscation, because it would be very difficult for the mint to sell you an eagle today and then next week demand that you sell it back to them. They did it in 1933-34, and it was they could do it because it was the money of the realm. But gold eagles today are not the money of the realm. Gold eagles are sold to the public by the mint. And they really turn around and say, oh, well, we sold it to you, but you can't have it. So as far as a confiscation of gold is concerned, your safest holding as an American would be a pre-33 gold. The next safest would be eagles. And on the topic of confiscation, the U.S. and Canada are considered the safest the safest havens for mining projects. And I would suggest that if we do go through a confiscation, I am not so sure they're going to confiscate the individual coins. I think what they'll do is they'll nationalize the mines, because that's the raw supply and there's more of it. Yeah, that's a plan, but the problem with that is how do you transact with it? How do you offload it at a later date? You obviously got to test for purity. I don't see them going door to door, because you'd have, in the first day, you'd have, several shootouts and deaths. So I don't see them going door to door. I don't think there's any need to melt down perfectly good gold coins into jewelry, because I don't think jewelry is not going to function. It won't work from a trade standpoint, because the other side doesn't know how much gold is in that piece of jewelry. Off the top of my head, I was going to say, no, I can't give you a timeline, because that's a crystal ball thing. But if you're starting the timeline with a credit freeze, I can tell you pretty much exactly what's going to happen. Everything will stop. Within 72 hours, nothing will work. Grocery stores will be empty. You won't be able to get gas. You won't be able to get anything. Within 72 hours, it will become every man for himself. Cash, physical paper cash, will work for barter probably for a couple weeks, maybe 4 weeks. But after that, we'll be on a barter. The only way to transact will be by barter. And the best thing to own if we're going to barter is junk silver.